Good morning. Okay, I had to shut off that computer. The sound anyway. All right, so markets are liking this NAFTA deal settlement. What doesn't this market like? It gets nervous from time to time, and like as if it's going to drop like a stone. And intraday, at times it does, which is kind of crazy how it can fall so fast, like you can see as it did here. And then it comes roaring back, and that's been the MO of this market, really, is the pulling back toward an area of support and buyers step up aggressively. And on its way there, it just seems like it won't hold, but so far it does every time. And at some point, it's not going to hold, of course. It's just what happens. But so far, everything looks good. Why is it doing that now? Hold on. Okay. All right. So markets turned around. They had the bottoming. It's the futures anyway, bottoming bar there. And did you see that, Alex? Because, and historically, it's a really good sign. If you look at changes in management in stocks that have been under such big pressure, long time, go back and look at IBM. Not that IBM's doing anything fantastic as far as price movement goes lately, but when it was, in the tank long time ago, and the new CEO came in, it's, it's the kind of setup that historically it's a big positive. So we'll see how much of this gain it can hold on to. It very well may be. Let's see how it pulls back. That's a pretty big gap in GE there. What is I'm looking at 16+% gap here. So markets moving up here, futures moving up anyway. So the spiders are going to gap up and cleared these highs here on the 60-minute chart. So, and this is what I've talked about as far as hourly timeframes. Like we've had these discussions about multiple timeframes. And so you can see the way it came down here in August. And this was a smaller angle or a more bullish angle of retracement on the pullback, but it did pull back to the bottom of the wide range bar. And so that's one of the concepts we talk about, is that pullbacks to the bottom or below a wide range bar, and especially a breakout one, puts the trend in question. It doesn't violate the trend, but the depth of retracement and move below a wide range bar like that is not what the most bullish setups do. They go sideways and then they continue higher. But one of the things that we talked about more so around here, and I think as it related to the cues at the time, was that this kind of a pullback on the daily time frame, you see a downtrend in the hourly time frame. And what we want to see, and I don't know if I can scroll back that far on the hourly chart. I probably can, but yeah, you can see it right here. I know I'm scrunching it up, but you can see the downtrend. And what we look for is the stabilization. Usually it takes us 2 days, sometimes a third, to where it starts to go sideways. And then once it does that and starts moving up, that's your buy signal. Now you can see it on the daily time frame, but since we're in front of our screens throughout the day and we do look at multiple time frames, I thought I'd point that out. So we've got that buy set up now, or signal, that says the markets are going to go higher. And one of the other concepts is, the depth of this pullback here coming down to minor support, but it's relatively far from the old high. And you can see the reaction when it got there. But at least from here to here is a much greater distance than where this is starting out to where it's going to reach the old high. And it could go right through it, but typically you're going to get a reaction. So when the pullbacks are shallow, even though it's in an uptrend, you have to keep in mind the possibility of at some point the trend stops. And when you have this kind of a pattern, it could result in what's called an M top because it's so close together. And M tops really set up or end in what's the unexpected. And what's unexpected here would be if it can't just push through it because the trend is up. So we have to be aware and watch. We take this as the buy signal, and we'll see if it gets through. But if it stalls here and say we get a breakout failure, maybe a pattern like that, where it cut 2 bars sideways and boom, and comes right back in again, that could be setting up an M top. So we'll keep that in mind as we go through the week. If it just blasts through it, fantastic. It's doing what it's supposed to do in an uptrend. And these 3 days here, what I call, repairing the damage, setting up this sideways consolidation and stabilizing. But the damage was the fact that it broke out. And when it broke out from this little consolidation here. It wasn't supposed to pull back right away. It was supposed to keep going. More like a measured move type of scenario. But it didn't. So, there's a lot of news in this market, whatever it may be, that kind of drives it day to day. But, it held the support. And now we've got this NAFTA deal that, is supposed to be signed. So, the fighting there over, and so it's all good. And so now the markets are reacting positively. Q's new all-time high, a grinder kind of a move, and push up. And let's just look at the Q's here. Those are the futures. And so we had this reversal. And if we look at the weekly, interesting. And it was just it's this sideways consolidation. And then this wide range bar. I talked about this in the advisory letter over the weekend. Now we've got this wide range bar that suggests it's going to push up above the base here and make a new all-time high. And we wake up this morning and that's what we have. Will it hold on to it? I guess we're going to see by the end of the day. And let's just look at the spiders here. Whereas they had this consolidation inside week. But they're gapping up here this morning on the news, and 292. They were at 292.50-ish. So they didn't make a new all-time high. They which obviously it's over here, came up into a little resistance. Didn't even quite get there. But what we want to see is basic stuff here. What was resistance should become support. So as prices pull back into here, and if it's really bullish, it's not going to come down and fill the gap for sure. So filling the gap, it would have to come down here, and that would be too far. What this is supposed to do, if it's going to pull back, is pull back to what resistance. It should hold that area and begin to stabilize and push up. So that's something else that we'll be watching for here to see if it actually holds. So there's the pullback, a little deep, and pushing up and just above Friday's high and stalled right there. So we'll see here the action at the open, how it handles that. But overall, it's in an uptrend, right? Higher highs, higher lows, 20s rising, but flattened out there a little bit over the few days. 50s rising, moving average alignment is bullish, and so on. And we talked about, I think we did last week, but obviously covered these in the letter over the weekend, is that breadth got mildly bullish, right? As this pulled back, but sentiment is neutral. So we don't have a signal from that. So it doesn't really help us one way or the other than to say, well, this can give us a little bit of a bullish bias, but our most bullish bias comes when sentiment comes down into the bullish level as well. So didn't get there, but you could see it did over here back in the beginning of the month, and got that nice move. So, and the Russell here is up, and let's get rid of that. We did talk about the fact that it needed to get turned around here. We needed to get turned around ideally here, but it broke lower, and now it's doing what this market does. you know, shakeouts and then reversal, and prices now look like they're going to move up. Well, obviously they're moving up here. Whether they can get through this mess, you know, historically it's going to chop around. It's not going to go through it, you know, with relative ease, but it should go through it just based on what the market's doing right now. And bonds sliding again. We'll see if they hold this area or not, but they've had a pretty steady correction down here, and you know, breaking through some support levels. And so what we're going to be looking for here, because they're at a very important point, is whether they're now going to, well, let's go a little further here, break out above this range and close above it, whereas, you know, they haven't been able to do that for quite some time. And you can see the bottoming pattern here. So if interest rates can push above here, you're really getting the confirmation of what we've been hearing, you know, that this economy is growing, it's doing great, the greatest ever, blah, blah, blah. You know, so we need to see interest rates actually start to push up, because that's the cycle. Good morning, John. That's the cycle of what happened through an economy going through what we could say was a depression and a recovery, and now a true expansion. And interest rates should go up to the point where they become a problem for the stock market. They're not yet. And so that's what we'll be keeping an eye on, which will take some time. And oil looks like it's going to go higher, consolidating a little bit here. Nice day, pushing up above this little consolidation. So look at this pattern. This is what is supposed to happen after a range expansion. Now, you got a little tail on the top, but, you know, let's just be a little open about, or flexible about, patterns. You understand the basis of the pattern. So we had a consolidation, a range expansion, and the candle bodies small, staying in the top of that range expansion, and then a move up. That's what it's supposed to do, not go back down below the wide range bar. So now it should continue to move higher, but it's closing the void. So oil's going to have a bit of a problem here as far as holding up. That's interesting. See, and that's part of the cycle, Lita. I mean, short-term interest rates going up like that. You remember back in the day when you could go and put your money in a CD and get 18%? Who needed the stock market? So we're way far from there. But, you know, and mortgages were ridiculous at that time. You know, you go get a mortgage, a 30-year mortgage, and pay 18%. And then I remember back at that time, I think when I bought my first house, my first mortgage, I think was at like 14 or 15%, you know, and then refinancing. And part of that cycle, you know, is a long, long, long way. Who knows if it'll ever get there again? Hopefully not. You know, refinancing, become a mortgage broker if that starts to happen, because all the refinancing that, you know, mortgage brokers did very well. And gold, no love. We haven't loved it, that's for sure. But it's been stabilizing here for a month, and we'll see. I always keep an eye on it. At some point, it'll start to perk up again. And yeah, you know, we've got a few things that are moving here, like GE. This big move up, and you figure that some shorts are getting crushed here. Short was definitely the place to be, but you know, news comes out like that, and you know, it was a big reaction there. And you know, Tesla is the other big mover there. So that's a big turnaround too. With that being said, I'll hand it over to Dan.
Hey, good morning, all. Hope you had a good weekend. Yeah, so that Tesla is now a bullish island reversal. But let's see if there's a pattern. 305, the answer is no. I mean, it's all patterns are not the same. It's just a gap and a resistance. But if it can turn around, and I don't know, we'll just have to wait and see. Opens. Well, I'm going to do them in no order. Microsoft, we're looking for a put spread, but also a directional 30-minute high. It's pulling in a little bit here pre-market after the big gap up, that is. Our CGC pot stock gapping up, that's good. Ours expires this Friday. This sector MJ, we are going to try to sell a put spread. Let's see, we aren't going to get the limit, so we'll have to watch it either on a pullback or adjust our desired credit. Charlie Papa, we have a put spread. Apple, I was looking for a put spread for this Friday. Plant, oh, Alex and I are in a, well, I'm in a put spread, but I'm still watching it for a new trade. Netflix, we have a cover to call. TTD, put spread. MRO, I'm watching this for a longer term trade. Intel, we're looking to do a third lot over, actually I just gave this intraday resistance, but it's gapping down here, so that's relative.